Welcome, everyone. This is more or less a special edition of the Sports Memo TV channel and Predictive Playbook cast of shows. I'm pleased to have Steve Merril on the show with me as my co-host. And you know what that means? If you watched this about 6 months ago, it's the financial markets show that we do together. We're both still very active traders in the markets, and the volatility right now is pretty high. And we wanted to join forces again and start presenting these shows to you. So this is the financial market show. More importantly, Steve, welcome to the show, first of all. How are things going over at WagerTalk and life in general?
Yeah, doing well. Filling in this week for Teddy, who's out. So doing the Wager Talk Today shows at noon Eastern, 9 a.m. Pacific live. And then, of course, archive 24/7 on Wager Talk TV. And then also be on Wednesday afternoon and Friday on the NBA Tip-Off show at 4:15 Eastern as well. And, of course, anybody watching us today on Wednesday, we do have Game 3 tonight of the NBA Finals, and we have Game 4 on Friday night, both in Boston. And then they take actually the whole weekend off, surprisingly, because they have to get back to the West Coast. So Monday will be Game 5, and then Thursday back in Boston, Game 6, and then Sunday. So, 2 days off in between after this week. Definitely stretching it out, but it's good for handicappers and for the shows. It gives us something to talk about a little bit longer before the dog days of summer kick in. But other than baseball, we will have the financial markets each and every day, and just as good, if not better, as far as trading opportunities and investing opportunities, in my opinion.
Yeah, mine too, Steve. You've been doing this a long time. I had 18 years on Wall Street. Last position was a chief currency strategist. So, Bitcoin is still kind of a mystery to me about what it is. But I think you and I have agreed that using the Chicago Mercantile Exchange futures regulated contracts are the way to go, because it's the only way you can short Bitcoin. You can't short the physical Bitcoin itself. So why don't we take a look at that chart, and we'll begin with that. And the chart right here. Sorry for the double images of us guys, but there. How's that look?
Looks good.
So what we have here is Bitcoin over the last 6 months or so. We're currently 30,260, and this is live. It's down 735 today. And Steve humbly said you and I caught both downdrafts from that 60,000 area, and essentially that's about the only two major trades I've had in Bitcoin is on the short side. But it seems like it's trying to find a base. And as you can see, the bell curve that's kind of laying on its side, that's a Stoudemire profile, which was developed in the late 70s by Stoudemire himself, who was a big pit trader in Chicago with the bond market, just an enormous name. And it's still applicable today. And what it tells you is that you have you can see my mouse pointer here, you have these bell curves. So we're down here filling in, hopefully, a base if you're bullish on Bitcoin, that will then get back up to at least here. And then ultimately, this is your major resistance now, which is at about 47,500, call it. So it looks like it's trying to base. I don't have any signals, Steve, to really sink my teeth into. What do you think the market is telling us here?
Yeah, if you look at Bitcoin, it's something we talked about 6 months ago when we did shows, is that 30,000 seemed like the support, right? And look how it jumped up from that all the way to that high back to, the 50s, and now we're back in the 30s. But the difference this time is that it's not only been in the 30s for a week, for 2 weeks, it's been like over 3 weeks. It's been hovering between 29 and 31. And if you look at that one spike a couple weeks ago in early May, right where the little white box is there on the left, in the middle there, it briefly intraday touched 25,000. It opened 28-ish, spiked down to 25, and then still closed at 28. It was a huge hammer, and it's never been below 28 or 29 cents. It's really never been above 31. Yesterday, just happens to be, we're doing this show on Wednesday, June 8th. Yesterday on June 7th, I thought was a tremendously important close. Once again, huge hammer candle. And we can't really see. It's the second. Yeah, exactly. It's a little small there, but people can look it up later. It opened around, 31 all the way down to 28, 29 again, and then closed right at the top almost. I was a little surprised it didn't jump last night. I thought that really could have been the buy indicator, but it hasn't really collapsed today either. It's only down about 1,000, around 30,000 on Wednesday afternoon. Look, it might still collapse. It was 10,000 a couple years ago when I started messing with Bitcoin. Yet it was also 60,000 a year ago, right? I think the risk reward still is tremendous to the upside. I am not a long-term buy and hold with Bitcoin or anything I do. I'm a swing trader. I am a trend follower. Bitcoin has been tremendously great, both up and down, as you mentioned, John, for the trends. So I don't really care where it goes. But if I put on my fundamental handicapping hat, and once again, I don't invest based on fundamentals, but I do think you can make a lot of reasons why this could be long-term support at 30,000-ish. First of all, it went from 10 to 30 really fast a year ago, and then it went to 60, but it's really never come back down below 30. It's tested it a few times, and the reason it jumped from 30 is a lot of institutional buyers came in, banks, hedge funds, who I believe, in my opinion, are still holding it. When it got to 60, I think that was recreational money, day trader money, whatever. The markets have corrected. Inflation has hit us. People had to liquidate stuff that had worked for them, and I think that's why it went from 60 down to 30. But I really think you can make a case from both a fundamental and technical, and that's kind of when you get the sweet spot in investing and trading. We get both lining up. That 30,000 is a great floor. Look, maybe it collapses. You have a tight stop. And I think when it hit 25, interday it went 28, 25, 28 that same day back in second week of May. I think that really was flushing out the people that had the smart stops in the mid-20s, which I think is where you do put your stop. Maybe you put it 27-ish. Maybe you get flushed out one more time. But if you really want to take a long-term perspective, you put your stop at 23 and you just let it run because it probably hits 40, 50, 60,000. There's tremendous upside. It could go to 100,000. I mean, nobody knows how high it could go. It can't go lower than 30 because it can go more past zero, right? So the risk reward on this is really good for long. I'm not a long-term trader with this, but if you are, I think this is a setup. I've got friends that jumped in at 50,000 and it just, I told them, I was like, well, what's the logic? It was 30,000 2 months ago. It was 10,000 8 months ago. This is back in 2021. Now it's 30,000. I've never tried to invest in Bitcoin. I've been a trader with it, but the setup looks really good to me. And as you know, John, with these tight channels, the longer they're in the channel, it's kind of like a compression channel. It's like a rubber band. It's going to snap one way or the other. Now, it might snap below 30. I'm not saying it couldn't. If that's the case, it could hit down to 10 again. But I think there's a lot more upside than there is downside. But this channel, either way you play it, when it breaks out, take advantage of it because I think it's a great setup.
Yeah, I agree with you too. And these moving averages here, the blue line is a 14-day simple moving average, and one of the others is kind of a specialty moving average from a famous trader and technician named Wilders. And that is also 14 days in length, but it's weighted differently. So you do get that feel, that channel. What I think is really healthy for this market is that it sold off hard. And I like this. I almost make this like a doji, a sea change type of doji that new lows, violent rally into the close, and now it's been just chopping around. One of two things is going to happen, and it's pretty obvious. It's either going to be going to the upside, and it's going to be a new move that has the potential, like you said, to go as far as it possibly could go. It's all, I hate to say it's all based on supply and demand, which is kind of ridiculous to say, but it is. And that's what happened with your friends, the chase, I call it. At 10,000, the chart probably looked a little scary. People were saying, boy, I don't know, this might not be a product that'll be around for another 10 or 20 years. And it's really iffy. But then when you get to the highs at 50, 60, oh my God, this is the greatest thing since, Burger King opened or something, drive-through restaurants, sliced bread, whatever. And they can't get enough of it. And that's the type of betting sentiment that we see in the sports betting markets, as you and I talk so much about. It's amazing the human behavior of how price action impacts decision making at both sports betting levels and this chart. And it's pretty cool, actually, from my eyes. With behavioral analysis type of stuff. But right now, the sentiment here on Bitcoin has never been lower since you and I have been tracking it. And that's the same way I measure it in the sports betting markets. For example, Boston tonight is playing Golden State, as we know. And there's sentiment favoring Golden State tonight. So, it's not excessive. But when it does get excessive, that's when we get those opportunities. In fact, I'll mention this, Steve. Game 1 of the NBA Finals, 78% of the tickets, and 75% of the money was on Golden State. Golden State also had a trend that supported them. Game one, NBA Finals, the home team, 17-2 straight up, 16-3 against the spread over the last 19 years. And that trend has matured. It really has little meaning in my models. And then combined with the overwhelming, Golden State's going to just destroy these guys. Well, we saw what happened. And the same thing here with Bitcoin is that you really don't hear much about it, like the bullish enthusiasm. And that's because people are reluctant to even talk about it. I think, it's everybody's kind of waiting. I think there'll be more volume, unfortunately, for the people that aren't buying now. If we go to 28, 32,000, the volume will start to pick up. And it's the same thing like chasing the Golden State Warriors. It's so similar to me, I can't even begin to tell you.
Yeah, I mean, the one difference, obviously, financial investing, whether it's Bitcoin or a stock or a mutual, anything, there's got to be a buyer for every seller. It's zero sum. The sports betting world, theoretically, they want zero sum. They never get it, obviously, but obviously the point spread is trying to get 50-50 action. And long term, it probably gets pretty close to that. They might be 60-40 one game, 40-60. It balances out in the long term. You brought up an interesting point, though, about Bitcoin, about how it's very difficult to short it. Because unless the futures market, which only came online about 4 years ago, there is the ETF I've been following closely now is BITO. And it's there again, you can theoretically short that. Obviously, a lot of people maybe can't. In a mutual fund or in a retirement account, rather, you probably maybe couldn't. You could buy it, but you couldn't, short it. But I do think it's interesting since that became prevalent the last maybe year, within the last year. Maybe I'd have to look. It's been 6-9 months maybe since that's been online. But it is interesting that Bitcoin's really fallen since then. So I wonder if that's part of it. Because keep in mind, John, when the CME, when BRR, when the Bitcoin futures market opened 4 years ago, it literally opened that night at its all-time high at 20,000, and it never went higher. And it did come all the way down to that 10,000 we talked about this a couple years ago. And I said from the point, because going into that, you could not short Bitcoin. You could only buy it. It had gone from a couple dollars to $100 to 5,000 to 20,000. But then the minute there was actually a two-way market, which is what a healthy market is a two-way market, it got cut in half. So now here again, we've seen it go all the way up to 60, come back down to 30 a couple times. And if I'm not mistaken, I'd have to check, but when that BITO, which is probably the best ETF right now, which is the most, really, I've tracked it. It's basically Bitcoin. Now, the downside is the future market's open 23 hours a day, so, there's a little overnight lag and stuff, but it still tracks exactly the move, like right now when we're live during the middle of the afternoon. And people can short that. Savvy investors can short it. And you got to wonder if that's played a role in it dropping as well. If that's the case, that's probably all been flushed out. Long term, you really do have buyers and not shorters. You just have sellers. So that's another reason why you can make a case that 30,000 range could really be the long-term support, which I think it is, because we got two liquid markets that can short. That's already been priced in. It's like a point spread, right? It's like when all the bad information is priced in, there's nowhere to go but up at that point. We see that with the injuries. When these NBA teams this year have been without key players, they move the line 8-10 points, and they win outright still sometimes. I really feel like this is the definition of buying low. Yes, it might break down. If that's the case, you have a stop loss of, 4, 5, 7,000 lower. So you're risking $3, $4, $5, $7,000 loss for an unlimited up gain of 30, 50, 70,000. I mean, that risk reward is really good. And yeah, being able to short it now is actually a good thing. I think that's actually flushed out some of that play money, and you're left with the serious money now, which is what you want long term. Also, for a healthy market, you don't want that stunk money. You don't want the meme money, right? Which runs, Netflix or whatever, or not Netflix, AMC, or GameStop, from $5 to $200 back to $40. I mean, that's great if you're catching it on a daily basis, but long term, obviously, you could never invest in those markets. And I felt like Bitcoin has kind of been the wild, wild west the last couple of years. I never would have told somebody to invest in Bitcoin, but I think you can make a case now that you could buy and hold at 30,000. Probably in 2 years from now, we're going to watch this video and people are going to be like, "Yeah, they were right."
I think so too, and that ETF is a good way to go. You don't have to put up so much capital, and you can grind your way into a position.
Yeah, it's priced around
That,
$18 to $19 a share. And just to do the math, you would need about, just based on the average true range, which is something I look at with my trend following method. That's how I position size everything. I'm trading 30 different non-correlated markets, as you know. I use an average daily true range, basically, or it's somewhat of a proprietary, but it's, in a nutshell, it's how much it moves on average. That's how you take apples and oranges and make them equal, basically, in your portfolio. Because, for example, the Bitcoin futures market, one contract is 5 Bitcoins. So that's a pretty hefty contract because each Bitcoin is 30,000 right now, roughly, 29, 31, 30,000 on average for the last couple of weeks. So one Bitcoin contract, which costs you maybe $10 in commissions, is getting you $150,000 of Bitcoin. And a lot of these places you need about 100% overnight. In fact, 110% with interactive brokers, and then the maintenance is 60%. So you need $150,000 roughly to buy one contract. If you're going to short it, you need almost 240%. You need almost 300,000. You need about 240,000 right now. I think it's about 110 up, 240 down. So to get 150,000 in Bitcoin on one contract, you need 110 in cash in your margin account. 240 if you want to short it. You need more than it's worth. So the average investor cannot do that, obviously. I fully get that. The BITO, and there's a couple other ones. This is the one I've been tracking. I think it's the most realistic. It's extremely liquid, millions a day traded. It's $18 to $19 a share. Right now it's about 19. So you need about, John, to get one Bitcoin. I'd have to run it. The average true range on the methods I was using is about 1.5. So you needed about like 3,000 shares of that is going to get you about 2.5 Bitcoin. So I guess it comes out to about 1,000 shares gets you a Bitcoin. I'd have to run the math exact. So at $18, that's 18,000 for one Bitcoin. It would be 5 would be 90,000 versus 110 on the futures market. So there's not a huge difference there, but you can buy one Bitcoin versus having to buy 5 with margin. So anyway, it's just the BITO is what I'd recommend for most people that are watching, and you can short that most likely if you have the right account. Yep. Although I think the beauty about this segment now is that it's the upside is where the value is going to be with Bitcoin. So I'd actually just do I'd either get out if it hits your stop, or I'd be long. I wouldn't get too fancy with shorting unless you really know what you're doing.
Yeah, I think I'm going to go back to the Bitcoin chart here in this weekly, only because it's been a longer chart than that the ETF one. But this area right here coincides with the low, and you can see there's barely any volume right in here, and that actually sets up good, and that's good meaning bullish. So as long as this thing continues to chop around here and consolidate these losses, which was 1, 2, 3, 4, 5, 7 straight, 8, 9 straight weeks of losses. Sounds like I'm talking about the Los Angeles Angels. So the fact that it's consolidating laterally, I think that's a bullish sign until proven wrong. Now, of course, if we start trading down in here, then you're probably going to test this line here all the way down at 10,000, like you had said earlier. But I think then you get the wheelbarrow out and you just, you take a full-blown position and then some, if it would ever get there. I couldn't hold myself back. If you told me I could get it at 11,000 or even 12,000, I think that would be just a tremendous opportunity. But right now, I don't think that's going to happen. I think it's going to keep chopping around. It might take another 2 months, maybe the end of the summer, and then it'll start resuming this powerful trend up.
Yeah, the only way it's going to crash is if these institutional, in my opinion, what's holding it at 30,000, as I said earlier, is that it's the big banks, it's the hedge funds, it's big institutional investors who have put just 1 or 2% of their portfolio in Bitcoin, right? They're dabbling, they're dipping their toes in it. When it was 60,000, it had all the recreational money. Now that it's back to 30, it's just the sharp long-term money. That could change. They might pull out. If they do pull out, it's going to crash to 20 or 10,000. But that's what it's going to take. It's going to almost take like some kind of government regulation where they can't hold it anymore. And I just don't think that's going to happen.
I don't think so either.
And, the other thing that's interesting, too, is we have more inflation than we've seen in 40 years. Bitcoin, theoretically, is supposed to be the ultimate inflation hedge, yet it's been cut in half with all the inflation, which tells you also this was just a wild, wild west trading market. But if it doesn't have an inflation hedge, which I think it does long term, by the way, gold, we haven't talked about gold, but gold's been very flat also for the last several weeks and months. It's been whipsawing me. That's a great trend word right there. Is on the whipsaw. Yeah, right there. See that huge run it had months
Yep.
ago, and now it's in a little bit of a wider channel, but that's still a channel, and it's got a couple spike. Look at that spike. I mean, and look at all the way to the left there. I mean, they both literally intraday or weekly spikes way up, and they came right back down. I mean, that's
It is a weekly
capitulation to the
bar.
upside. Is that a
It
daily?
is a huge volume days though on those spikes.
Yeah, they're legitimate. I mean,
Yep.
oh man, it's
This
like
is
it's
kind of
not
like a little
always right.
saucer here too.
It's like people. You don't just all of a sudden go the other way on a doji, right, or a hammer. You just don't. But
Right.
it's like when you step back and you see the forest from the trees. I feel like a one day doji is like looking at a tree really close, right? But now you look back and you see all these. It's the forest, and you can see why it hasn't gone back higher. I mean, just look at that. That was complete capitulation to the upside on both of those. Whereas that Bitcoin, that 25,000 within the one day and then back up to 28, I mean, that makes me feel so good about the upside once again. Whereas with this one, I don't know what to tell you with gold. I mean, the Prez and I were talking about this on Wager Talk today earlier. Watch that on Wager Talk TV on YouTube. We got a good 10-minute segment about Bitcoin. Platinum Prez mentions. He's been big on platinum for a few months. My trend method went long and had a huge spike the other day. I was happy with that. I'm not investing in it fundamentally. He is more so. But like platinum has jumped. Copper jumped a few weeks ago and a few months ago. Copper was on a huge uptrend with gold, but it's held up a little better than gold. Gold is similar yet different than all those metals. For some reason, it's lagging, but I just find it interesting because once again, gold is supposed to be that long-term inflation hedge. Bitcoin's supposed to be the new inflation hedge, and they both have actually gone down a little bit.
Yeah.
Be interesting to see how that plays out.
Just wanted to highlight this because we are getting close to the end of the show here, but these patterns, and you and I talk about these all the time, are ones that these would be the best bets for our show, so to speak. When you get an engulfing candle like this, and what that is, it's a new high or higher high than the previous day, lower low, closes below the previous day low. That is a sea change type of event. And there are days where you get a 50% retracement of the size of the candle. And then you can see that this actually didn't even get the 50%, and then it failed.
Right.
And, we do this, we do this, we do this. Now, here's another engulfing candle. Bang. And then immediately sells off. So a lot of times what I do, I didn't trade this one, but I might put 50% of a position on here, much like I do in the NBA totals.
Right, the live betting, right, versus live betting, yeah.
Yeah.
Pre-flop and end game, yeah. I mean, it's the same thing with daily trading, yeah. There's no reason you can't do the same way.
Yeah. So, you have time to look at the S&P, or do you want to?
Yeah,
look
definitely.
At
Let's do one more. That's a good one to close with because obviously that's the big brother, and that's the one that almost anybody who's watching, I assume, has some kind of exposure to, whether it's in a retirement account or a mutual fund. And Prez and I talked about this as well in this show. Prez goes, "Do you play individual stocks?" And I go, "I don't because I take a big view of the markets. I play the indices, right? And once again, people have 20 stocks. They think they're diversified because they have 20 different stocks in their portfolio. They're still 90%, 95% correlated, and they're all going to move in unison. And Apple's sold off just like the market is sold off because basically Apple is the S&P. I mean, it makes up like 20% of the overall 500 companies. Like one company's taking 20% of it. With that said, I think the S&P is a great indicator of the overall economy and the mindset of the economy. And look, that COVID low is all the way there to the left. I don't even see the dates. I know that's the COVID low on the left.
Yeah.
And yeah, and it's been an incredible run since. I think a lot of it in hindsight had to do with inflation. Everything was worth less. There was nowhere else to put your money. And people had a lot of free money to invest, of course, and that's why we have inflation, because people were just handed money left and right, and that's why the market ran. It's down almost 20% for the year. I think that is what's normally considered a healthy correction. I still think there's a lot of indicators that could go a lot lower. If you look at the the adjusted Cape-Shiller ratio value, look, the long term, the market moves short term based on earnings and news and basically trading. Long term, it is somewhat efficient because if you're not making money, you're going to fall out of the S&P eventually. They just put 3 or 4 new companies in the other week. With that said, though, the value is still not there. We have a downtrend now, but still an overpriced market. which is by far the worst possible time to ever invest because you got value guys, you got momentum guys. I'm more of a momentum guy. I'm a trend follower. The best of both worlds is both. So if you're a momentum guy, it's down. If you're a value guy, it's overpriced. You can't make a case still to be bullish the stock market. I just don't see it. I'm wondering what your indicators are saying too, John, as far as sentiment and stuff, because I'd love to hear that because obviously that's something I think is important.
Well, again, up here, sentiment was in the 80s on my metric, and that
as in a positive, right?
well,
As people were positive. They were positive, 80% positive for them, which is not a positive, but for them they were bullish. Got you.
That's exactly right. Similar to game one of the finals when everybody was on Golden State.
They were, exactly. Yeah, definitely true.
So what we have here, I wanted to show this. This is one of those engulfing candles, a precursor to what did happen. And then here you have, it can be called a couple different things. To me, that's just a top doji. Open and high, open and close are the same, and then high and low are pretty narrow there. But that's a pretty big range on that day. It only looks small because these ranges were huge on the intraday. Then you have this short covering candle.
Just like Bitcoin. That's so similar to the Bitcoin candle that was like up and down 3,000 in one day. And look how it did rally after that, but then it couldn't hold, whereas Bitcoin has held that one. And look how there's a big spike about a couple weeks later with that other green, that other one, and it rallied a little off of that one. Exactly. Rallies off of that one, and that doesn't hold. So was it fool me once, fool me twice? Now it's failed to hold twice, right? And as you know, John, I mean, normally 3 times, that's it. 3 strikes, you're out, right? Another sports reference for you. Not good signs, in my opinion, and now it's even lower. Now there's another triple at the bottom there, right where the white box is. Another extreme spike, and we've rallied off of that again. But we've done that 2 other times only to go lower a few weeks later. Yeah, I mean, look, I'm pretty much neutral on this right now. My trend model is rolled over. They're a little bit long. I'm not feeling great about that. I still think the risk-reward on this one, yes, it maybe gets back up, to that middle section from a few weeks ago, but risk-reward is terrible to be long right now. The buy and hope, this is just buy and hope right now if you're long. It's not buy and hold.
Yeah, and your hope, you're right. Your hope is right here. If you get through that, that's your hope. But
you got about a $4,000 downside, right? So, I mean, it's like the exact opposite of what we've talked about with Bitcoin.
It's like you're putting a 7-foot basketball player in a traditional 8-foot room with a ceiling that's 8 foot, is what I mean, and telling him to jump as high as he can.
Right. There's only so much room for him to jump at this point. There's only so much room for this market. And like I said earlier, theoretically, it's still in a downtrend. However you want to draw these lines, whether the last 3 weeks or the last 3 months, it's a downtrend. And then on top of that, it's still overvalued. So, I just don't. Once again, when you take a big picture like we're doing here, it's just not that complicated. And look at and here's the thing too. And the difference with Bitcoin is that I know it was 10,000, but then it went to 60, back to 30, back to 50, back to 30. This is down 20%. And in that little short picture we had earlier, it looked like it's been nothing but down. But look at the big picture here. And this is just since COVID. This is just 2 years ago that low. We haven't come close to like a 50% retracement. We're only down like 20%, So there's a lot of historical room. And 50%, a market can't do that. Well, it's done it 3 times in the last 20-some years, basically. I mean, it's corrected 50% at times. People forget what kind of drawdowns the stock market could have because everyone thinks, it's up 10% on average over the last 100 years. But there's been, 70, 80, 90% in the 30s. We've had 50% 3 times the last 3 decades. And then on top of that, we got the worst inflation we've ever had and a lot of other things that could go wrong. So, I think whenever things seem easy and automatic like they have for really a decade now with the stock market, makes me very nervous. So, this is important. A lot of people might not be in Bitcoin or care about Bitcoin, but almost anybody listening probably has exposure right now to the stock market. They might not even realize it, whether it's a retirement account, any mutual fund, because once again, you might own 20 different stocks, but they've been 90% correlated during this downtrend, I bet you.
Looks familiar, that looks just like the S&P stock. But there you have a huge engulfing candle. And you got another one right here.
So which one is this?
Highs. The all-time high was made on a huge engulfing candle.
What chart is this, John?
Apple.
It is Apple? Yeah, exactly. Because Apple basically is the S&P, like we were saying.
It looks like it. It's a little bit more volatile, actually. So the index obviously gives you a little diversification, but it's going to track Apple.
I've got a theory on this too. Like you keep thinking, well, Apple's a great company still, right? And I do agree with that. But let's think about it. Look, if inflation's the worst it's ever been, I haven't heard anybody say this. It's just me thinking. But look, my phone's 5 years old. I've got an Android, and I'm just lazy. I have everything on it, and I don't really buy things in general. I need to get a new phone. I probably will shortly. But I've had it for 5 years. It still works fine. The camera is still as good as I'll ever need. Like, at what point do people not need to keep getting an iPhone every year? Now, there were like iPhone 10, 11, 12, 13s, right? My MacBook is several years old. It's faster than anything I've ever used. It's still running great. We're doing the show live on it right now with no lag. Technology is the one thing that gets better and cheaper over time. If you're really up against it, if your grocery bill is doubled, I mean, it doesn't take a rocket scientist to realize you don't need to buy a new laptop or a new iPhone like everyone's been doing. Where's Apple going to make their money? And this is something I haven't heard anybody else talk about, but you could definitely make a case for why Apple could go down substantial. I mean, and then we got issues with China and all this stuff. 90% of their stuff's over there. I know they have a lot of sales overseas and whatnot, but inflation's the deal. Look, people got to pay their rent. People got to buy groceries. I mean, they don't need to buy a new iPhone every year, and they're not cheap. So, and these things are incredibly good now. Like they'll last you for 10 years. It's just, that might be something people are missing because the S&P is heavily, heavily weighted with Apple. And when Apple sells off, everybody has exposure to Apple because almost everyone owns it. They're a mutual fund. They have to own it because they can't risk not having Apple when it's run for 10 years. The S&P, it's a huge chunk. So what happens is when people are losing elsewhere, they have to sell their best stocks. And that's another reason Apple gets sold off. So lots of things. We saw Walmart and Target a few weeks ago have terrible earnings, and they just crashed intraday for a couple of days, like down 30% within one day. I think there's a lot of bad news out there that's yet to been priced in. There's a lot of risk.
Yeah, and crude oil here, we'll end with this one. It's obviously in a major, major uptrend, and you don't try to fade this. It's going to do what it's going to do, and then ultimately, the supply and demand factors will reverse and the prices will come back down. But for right now, the truckers are getting killed.
Yeah, diesel. I mean, diesel's off the charts. Like everyone sees unleaded and whatnot, but not only were there shortages for a few months, but let's put this in perspective once again. Everything you get in any store you go to, including all your food, is basically being trucked there by trucks that need diesel. And there were some points where they were afraid they're going to run out. Not that they are overpaying, and that obviously is going to jack the prices on all of us, which it already has. But there's some scenarios where you might not even be able to get stuff. I mean,
right.
This is third world stuff that we're dealing with, and the market is still 20% from its all-time high. I'm not saying we're Venezuela. I'm not going that extreme, but go look at what's happened to some of these markets when they've gone down 90, 95%, when inflation's gone up 1,000. I mean, our inflation's pretty high right now for us, and the dollar is still the reserve. But then now what China and Russia are trying to do is make it where they don't need the dollar anymore. And that also, John, big picture, we might look back a couple years from now and be like, man, we missed this coming. That basically the biggest economy in the world, China, other than us, was basically not relying on the dollar anymore. I mean, that's not gonna end well.
It's huge. And
you're a currency guy, so you understand that better than anybody. I mean,
it's monumental. I mean, that's a historic benchmark. It'll be a case study at Wharton Business School someday.
When they're speaking Mandarin, when they're doing the class in Mandarin, hopefully not. I don't think they'll be doing it in Russian, but they might very well be speaking Mandarin as they're doing that case study because we're going to have our lunch eating. If the dollar fails, we're in big trouble. I mean...
Yeah, sorry about the noise behind me. I'm actually in a hotel.
Nice. Nothing wrong with that.
We're doing a little bumping around a little bit, trying to see family and stuff. So not a big deal. But do you hear any noise behind me?
Just a little chatter. Nothing crazy.
Yeah, this is work gave me a new MacBook Pro, to your point. And our last show, Steve, I did on a 2012 MacBook Pro. So this new one is just a couple months old. So to your point, you get these things and they're going to last forever. I used to use the high-end cam that WagerTalk got for me. The Logitech, whatever.
Yeah, that's what I'm using right now, actually. Yeah.
Yeah. So I'm not a movie star, but I think I look better on this than I do on the 4K
Yeah, and
video.
I'm not a real phone guy. I mean, my phone's 5 years old, as I said, but I mean, people are making videos and stuff with their phones with a ring light, and it's higher quality than we would have had 5 years ago with a regular camera. So, I mean, it just occurred to me as we were looking at that Apple chart. I mean, everything's getting better and better. It's like you don't need to get a new iPhone every year, and you got to really wonder what's Apple's business model otherwise. I mean, it's like, you and I aren't going to need a new MacBook for 10 years, and that's a good thing. They make a good product, but at some point, I don't know. It's going to be interesting to see how that plays out.
Yeah, I agree because they come out with the new ones now in September, and if you're thinking like, oh, my laptop's 5 years old or it's 3 years old, and you get sucked into the new bells and whistles because Apple has been great at telling you the things that you didn't realize you needed.
Right.
But
And
then
now
as you
that you
get
have
older,
three
I think
cameras
you realize
versus
you
two
don't need it.
cameras versus one camera, it's like how many more cameras do you need on your phone, right? I mean, that's the thing.
Right.
I really feel like they've reached that point of capitulation where I don't know. Maybe, and look, I'm never going to underestimate Apple. I mean, Jobs is no longer around, but I'm still not going to underestimate them with maybe the next innovation. But they tried the Apple TV thing a few years ago. That didn't take off. I don't know. Maybe they have something brewing. It would never surprise me, but I don't feel like they're entering the VR space. That's something I will give Facebook credit in that regard. Is they're really trying to get to the virtual reality. I do think that's kind of the next horizon.
Yeah.
And robotics is also. I don't, at least from what I'm seeing. I mean, unless it's really hush hush, I don't see Apple in either one of those fields.
Not at all.
So we'll see.
Not a big player, at least.
And history's shown this. I mean, I don't have it in front of me. It'd be, Wikipedia this or something for anybody out there listening. It'd be fascinating to look at. Look at the highest S&P holders over the last 100 years or whatever. My guess would be it was probably an oil company 100 years ago. It was probably IBM, with Xerox or IBM in the 70s.
It was.
So I'm just trying to think of who maybe it was in the 90s before Apple. It was probably Microsoft at some point.
U.S. Steel.
U.S. Steel. I mean, so these companies don't stay number one. And in fact, I'm sure you know this, Jeff. You take the S&P minus like the number one holder, you've outperformed over the years of the index average. Because they get too big to play. Like you said, they become that 7-footer in an 8-foot room. That's probably a good analogy right there. Because and it looks like with them rolling over, there's going to be some correction until that corrects itself. And I don't think that's anywhere close to happening yet.
Yeah, I agree. I totally agree. Well, I guess that'll bring us to the end of the show here. I know you have to get going for sure. I have Manny's Irish Sports. Let me say it again. Manny's Irish Pub Sports Betting Show with I think Tony Finn is arriving, Mejia, and Mr. Rob Vino. My three partners, co-hosts, whatever you want to call them. And it's usually pretty fun because I love feeding into Tony Finn's mind. I'm an instigator with him.
It doesn't take much.
I shouldn't say.
Doesn't take much.
No, you're right. It doesn't. I can look funny and just say like, and he'll go, what? Well, anyway, that'll be a good show. There'll be sports memo people on it too. And Steve, thanks for your time. I believe we're going to try to do these as often as possible going forward. Every day if possible. Maybe not 45 minutes every day, but whatever we have time for, we're going to provide, and hopefully it'll be some benefit and value for everybody. So I always end these shows, Steve, the same way. Bet with your heads, not over it. And I guess on this show, I should say invest with your heads, not over it. And may all the wins and profits be yours. There. That's pretty good.